Hi guys, Dan with Index Option Trading, and we are starting off with the chart of SPX here. The reason I brought up this chart here is I want you to look at it and see what is going on in the last 2 years. Um, this is the stock market chart for SPX for last 5 years, and if you can look at it here, this is the high, which is the December high, October high in 2007, and from that we dropped here in the recession to 640 levels or whatever they were, very low, 666. So that is where we dropped in January or March of 2009, and from there on we have progressed quite a bit, and now we're standing here at 1227. The stock market under this new administration has doubled. So if you look at SPX, this was really about 666, now 600 something, and now it's about 1227. The stock market has doubled in the last 2 years. So that gives you a little perspective what we have done, where we have, and how far we have come. It's a long way to the top, baby. That's what they say. It's a long way to the top. So that's what it is. And if you look at it, I've drawn the Fibonacci retracements on this chart of 5 years, and we're sitting here right now at 61% of the Fibonacci levels here, which is a key level to be observed, and the market is just sitting right there, and it can go either way. These are reversal places. The markets can reverse or change or can go higher, but the significance of this chart is that we're sitting at 61% of the Fibonacci retracement. We have retraced about 61% of the decline that we went into in that bear market that was from hell. That bear market can never be repeated. And then again, in the beginning of the year, we had this bear market here, and they formed a big, huge cup. You can take a look at it. Let me remove these Fibonacci's now, and you could let's see, how do we remove this thing? It's not easy to do that online when I'm talking. Let me try to do that. Okay, so we removed it, and if you look at it, it has formed a nice cup and a handle, and it's trying to break out right here at 1227. This is the breakout point here. Right here about 1230, if the market goes up here, there's not much resistance to the left except 2 years ago, which I really don't think counts. So the market has a free ride here from up to 1240. This cup and handle also tells me the depth of the cup is about 200 points. You can measure that from the top of the cup to the bottom, and then add that amount to the top of the highest point in the cup. It will come about 1425. So the market can rally up to that levels from there on. And let's go back and start looking at our normal charts here. I will go to the year to date again, and this is what is happening in the neck of the woods. This handle was formed, market rallied up, sitting at 61% Fibonacci, getting extremely overbought, and there could be some downturns coming in there. So that is the state of the affairs here as of trading during the day on December the 7th here. But we're looking at a very strong market here still. The leading index actually is RUT, and if you look at it, it has kind of peaked out here at 766 with that extremely overbought conditions. So the downturns could be expected in the market to come anytime. And let's take a peek at NDX here quickly and see how that has been doing in the marketplace. It is also at 2200, rising above that highest point in the cup handle, and it can break out from here to the left, to the top, because there's no resistance to the left now. So this is where the markets are going. The market direction is definitely up. The fundamental reasons are there because the economy is improving and so on. And also the market is very happy about the tax cuts, Bush era tax cuts being preserved for the rich. Guess what? People who run this market are the rich, and they are the millionaires and billionaires who run this market. So they're very happy today, and I think that gives them enough impetus to keep the market rolling up higher. So that is all for today, and the direction of the market still remains up.